Hi, it's Brian Decker with your Market Minute. I want to talk to you a little bit about the presidential cycle. The presidential cycle over 4 years is where the first year is typically pretty good. All the presidential promises are going into effect. The market usually likes that. Second and third year are kind of flat, and then the second and third year are kind of flat. And then the fourth year with all the campaign promises are typically good again. So where are we? Now I'm going to get even more specific. So this goes back, data goes back to 1900, and it looks at the Dow and the markets. And what happens is historically there's been a significant uptrend in the second half of an election year. That's next year. And the first half of the third year of the president's term. That's what we've just experienced this year. So it'll be interesting to watch to see how this plays out. But if it does, we should be flat to down over the balance of this year and the first half of next year, but being strong in the second half of 2024. That's what the presidential cycle says. History doesn't have to repeat. It's just data that is averaged over, last 122 plus years and has produced a chart. So we're seeing where we are in the chart. We're following it with the gains that have been made so far this year, 2023. So it'll be interesting to see if it happens. We'll see. The markets are not bearish right now. In fact, the markets have gained back 78.6% of the 2022 decline. So the markets are showing strength. Percentage of stocks trading above their 200-day moving average is strong. So we shall see. This would be a change. This is just a heads up that the strength that we have seen, if the presidential cycle takes over, we should see a flattening for the rest of the year, flat to down, and then pretty flat first half of the 6 months. So we'll see if that happens. Brian Decker, hope you have a great rest of your week.